Welcome to the Explainer. Today, we're diving into Ally Financial's full year 2025 earnings report. They went into the year with a really clear game plan, all about focus. And now we're going to see exactly how that translated to the bottom line.
So, the big question is, how'd their year really shake out? Well, to get a handle on that, let's just jump right into the headline numbers, the stuff that really got Wall Street talking.
All right, so for the final quarter of the year, they clocked in with an adjusted earnings per share of $1.09. Now, you got to remember, the Wall Street consensus was sitting at about $1.02. So, yeah, they didn't just meet expectations, they sailed right past them. A really solid beat to wrap up the year.
But honestly, the full year story is where it gets really impressive. Their adjusted earnings per share for the entirety of 2025 shot up by a massive 62% compared to the year before. I mean, that is just a huge leap in profitability.
And it wasn't just about earnings either. They also delivered on the revenue front, pulling in $2.17 billion for the quarter. And yep, you guessed it, that also topped what the market was expecting.
Okay, so those are the numbers that grab the headlines, right? But numbers this big don't just happen out of nowhere. To really get the story behind them, we need to open up Ally's report card for the year and see what they did right.
And just a quick heads up before we go any further, you're going to hear me say adjusted EPS a lot. All that really means is we're looking at a number that kind of filters out the one-off financial noise, so we can get a much clearer picture of how the core business is actually performing day in and day out.
And this chart, well, it tells the story of the year perfectly. You can see that clear, powerful leap in the full-year adjusted EPS, jumping from $2.35 in 2024 all the way up to $3.81 in 2025.
So the billion-dollar question, how'd they pull off that kind of growth? The answer really comes down to one word: focus. It was all about a major shift in their approach, something their CEO called a strategic refresh.
You know what's so interesting here is the language from CEO Michael Rhodes. He talks about deliberate choices. The whole idea for 2025 wasn't to try and do everything, but to pick a few things and do them exceptionally well, basically doubling down on what they're already great at.
And you can really break this focus strategy down into 4 key moves. First, they simplified a lot. They got out of businesses like credit cards and mortgages. And in a tricky economy, that's a really smart play. It cuts down your exposure. At the same time, they were de-risking, beefing up their balance sheet, and keeping a super tight leash on spending. They even managed to cut their controllable expenses by 1%. That's discipline.
Okay, so that's the strategy on paper. But how did it actually play out in their main business areas? You know, their big moneymakers. Let's take a look.
First up, their absolute beast of a division, auto financing and insurance. This is really the historical heart and soul of the company. And the scale we're talking about here is just wild. In 2025, they got a record 15.5 million applications for consumer auto loans. Think about that. Having that huge volume gives them a massive strategic edge because it means they can be incredibly picky about who they lend to.
So with that massive flood of applications, they grew their lending to almost $44 billion. That's an 11% jump. But here's the crucial part. They did that while putting almost half of that new business in their safest, highest credit quality bucket. On top of that, their insurance business had a record year, and they kept loan losses, what they call charge-offs, under 2%. So they're not just lending more, they're lending a whole lot smarter.
All right, next up is their corporate finance arm. This is the part of Ally that lends money to other businesses, mostly in that middle market sweet spot.
And wow, this division was a real star performer. It delivered a huge 28% return on equity, which is just a fancy way of saying it's incredibly efficient at making a profit. And get this, for the second year in a row, they had 0 charge-offs. 0. That tells you their underwriting is incredibly disciplined. And of course, you can't talk about Ally today without talking about Ally Bank. We're talking about the biggest all-digital direct bank in the entire U.S. It's a huge part of who they are now.
They're now serving a whopping 3.5 million customers. In 2025, it marked their 17th straight year of customer growth. That kind of consistency is just incredible.
The bank is basically a fortress of stability. They're sitting on $144 billion in customer deposits, and an amazing 92% of that is FDIC insured. Plus, people who bank with Ally, well, they tend to stick around. We're talking customer retention rates over 95%, which is just fantastic.
So with a really strong 2025 in the rearview mirror, the report also gave us a pretty balanced look at what's coming down the road. both the good stuff and the potential bumps.
On the one hand, there's definitely cause for optimism. Management announced a new $2 billion share buyback, which is a classic sign that they feel really confident about the company's future. But they're also keeping it real. They're watching for potential pressures from the used car market, what's happening in the labor market, and just, the general economic uncertainty out there.
So, if we boil it all down, here's the takeaway. Ally spent 2025 sharpening its focus, getting leaner, and really strengthening its core. And the results speak for themselves. They were impressive. Which leaves us with a big question for investors to think about. In a market that's always changing, will this kind of disciplined, focused strategy continue to pay off?